How cool.
Are these on
This
are
is
these
what
on
my
Be
life has
Live?
come to. Yes. This is Snap Camera. This is Snap Camera. So I'm
Oh, this is
all kinds of fun things here at home. I'm so busy, Joe. Just so busy. So busy, as you can see. I don't know why this isn't working, but it's supposed to open when I've done this
you're
before. But anyway,
you're
um,
behind the curtain now.
I'm behind the curtain, but there I am with my glasses. So I'm learning so many new skills. We've done shows where we've said everyone should learn new skills. And, I get a little bit high and mighty. I say, oh, I'm learning all of my continuing ed credits for my CFP and this and that. I'm also learning lots of things like Snapchat
Yeah,
and
very
how to work
important.
cameras and all kinds of stuff. Yes. By the time this is over, I will be 12 years old.
It is, yeah. It's fantastic.
Yes.
That's so
And my
good.
12
All right,
in a
everybody.
house. There we go.
Welcome to a recording of Money with Friends. I'm Joe, this is Bobby, and we are going to have some fun recording a couple episodes. Bobby's on fire. She did 2 episodes before this, and she's back for more. So you're on a roll, and I'm just beginning.
This,
So
this episode is going to go out before those episodes.
yeah. And these ones, well, the first one we do is very timely about oil. The second one we're going to do is on the mortgage forbearance programs, which a lot of people are taking advantage of,
Yes.
which is good, but there's some hidden stuff that we need to let people know
Right.
about.
It's
So,
important to get all the facts, not just some of the facts.
yeah. All right. I'm going to hit record there and hit record here. So we have a backup. And this is the show for Saturday, April 25th.
Why did oil prices go negative? And when will we all start seeing big savings at the gas pump? Will we? That and so much more on this edition of Money with Friends. Welcome to the Money with Friends podcast. I am certified financial planner Bobby Rebel, host of the Financial Grown Up podcast, coming to you from Lake Mayapack in Putnam County, New York.
Wow. Coming to you from Oakland County, Michigan, outside of Detroit, where we make the Stacky Benjamin show. I'm Joe Saul-Sehy.
This is the Money News Show that includes commentary on recent headlines and stories with thought leaders from across the financial landscape. We break those down into what matters to you, our friends, and we leave you with a takeaway to make it your own.
Today's show is brought to you by Tiller Money, your financial life in Google Sheets updated automatically each day. Man, you're stuck at home. Why not get your financial picture in order? Head to tillerhq.com/MWF for more. You can try it out and you'll get 20% off if you use our link. That's tillerhq.com/MWF. Bobby, we had a weird thing happen earlier this week. Oil prices went negative, which I think meant we could each get some big barrels and oil companies would pay us to take it. How great would that be?
Not so much. I don't know. I don't know about that. This whole thing, I have to be honest with you. I had to, I know a little bit about finance and all that stuff, but this I was really confused. I mean, you explained it to me. I consulted some other people that we'll talk about, but I didn't get it. I thought it was really weird. So I'm right in there with a lot of our audience that this made no sense to me.
Well, and that's in the excitement here, we've got a lot of people, novice investors thinking, well, oil can't stay low forever, so we should probably invest here. We'll give our opinion on that as well. Let's kick it off, though, by having one of our friends start today's show.
All right, this article that we are going to read comes from New York Magazine. It is by Josh Barrow, and it is titled How Oil Prices Can Go Negative. The mass closure of restaurants has led to a national oversupply of green beans. Americans apparently don't eat as many fresh green beans as they did when they were home. Oh, do I have the wrong? Oh, this
Nope,
is the
no,
correct.
no, that's actually the
This
way
is
it
the way it
starts.
starts. Oh my goodness, because I put this together a couple days ago and now I'm looking at it. All right, so even if people want more green beans to cook at home, producers also have difficulty switching on a dime to serving the commercial market from serving the commercial market to the retail market. So that they used to sell to restaurants, now they're going to sell to actual people. So it's a little
Yeah.
trickier. But at least they're making an analogy here. But at least the farmers with too many green beans don't have to pay someone to take their excess green beans. They don't even have to pay someone to pick the green beans. They can just plow them back into the soil, plant again, and hopefully somebody will want to buy the green beans in a few months. For this reason, the price of green beans cannot go below zero. But what do you do if nobody wants the crude oil that comes out of your oil well? You can't just dump it on the ground or pour it into a river or burn it. The EPA wouldn't take kindly to that. You also generally can't just turn the well off if you want the option to get oil from it in the future. Oil wells are expensive to drill, and you think prices will be positive again in the future, so you don't want to lose the well. But in the meantime, oil is going to keep coming out of the well, and you have to get someone to take it off your hands, even if that means paying someone to do it. That is why the price of crude oil can go below zero, at least for some period of time. So on Monday, so earlier this week, the price of West Texas Intermediate oil futures for delivery in May fell to negative $37 per barrel. You should not read too much into this as an indicator of ongoing prices of crude oil, let alone gasoline. Tuesday is the last day, so that already passed to trade. So this was coming up on the end of the futures contract. So Tuesday, the day after Monday, was the last day to trade this futures contract for oil to be delivered in May. And if you get stuck holding an oil futures contract after trading ends, drumroll, you may be obligated to actually take delivery of actual crude oil. So investors who aren't actually in refining or other oil consuming fields have to get rid of their contracts. And that led to some screwy activity in a market with thin trading. The futures contract for June, trading around $17 per barrel as of, Tuesday morning, may be a better indication of the sort of crude oil prices we can expect to see in the next few weeks. And by the way, I did check, that's where it's trading around now. But positive, but far below the pre-crisis levels. The June futures contract had been trading near above $50 a barrel as recently as February 26th. Okay, Joe, that was just ugly. You take it over.
Yeah, you might be wondering, and I was, if crude oil is essentially free right now and expected to still be very cheap in June, why am I still paying $2 a gallon for gasoline? Well, there's a couple answers to this. One, is that you can't put crude oil in your gas tank. You need a refiner to make gasoline from the crude oil, and oil refiners have cut their production. Some refineries have closed entirely. This disconnect, refiners shrinking production while extractors continue to produce, is why charges for oil storage have skyrocketed and market participants are worried about running out of places to put crude oil. The other factor has to do with the operations of gas stations. They're able to buy gasoline much more cheaply at wholesale than they could a couple months ago, but they're also selling much less volume of gasoline. As such, they then need a higher markup per gallon to cover their non-fuel costs than they used to. And average retail gasoline prices are only down 97 cents per gallon from a year earlier, even with wholesale prices down a buck 51. Normally, falling crude oil prices provide benefits to consumers that go a long way to offset the economic costs from lower income to oil company owners and workers, but it's not obvious when and how much you will get to enjoy any benefit from this price crash. You're not driving much now, and in the medium term, oil producers will cut back on production. When the economy gets going again, they'll be slow to start production back up in the same way they're slow to shut it down right now. Market participants expect oil prices next year to be over $30 a barrel, which means as the economy restarts, you should be able to enjoy lower gas prices than you saw in 2019. When gas stations have a normal volume of customers, they'll face more pressure to pass fuel cost cuts onto them. But if and when the economy gets back to roaring, the bust for oil producers and the current crash should lead to a more constrained supply that could push prices up. So I hear that, Bobby, and the very first thing that I thought when I heard that is buy low, sell high, right? Let's
Yeah.
go buy some oil. Might not be that easy.
No, it's really complicated apparently. And you taught me a lot about this. And I also consulted my dad, who'd been in the oil business for a lot of his career. And it's really confusing. What's going to happen essentially, though, is, this was a crunch because people don't want to actually have the oil delivered to them. And it was just a weird, very temporary situation. The truth is, the industry is going to adapt. And we've already heard that OPEC Plus, which is the group that also I think includes Russia, they're already cutting production, and the industry will make the appropriate adjustments. But look, the storage facilities were being filled as demand fell very suddenly, in large part because of this quarantine. People weren't driving, so then they were using all of these places to store oil, and then they just started getting really filled up. And then you had this weird situation right as the contract was coming due. So the May contract was ending. And then literally one day later, you're into June and things are sort of normal. I mean, obviously, $17 a barrel is much lower, but it's a positive number. And the other thing that was explained to me is that there are a lot of costs that go into oil besides just the actual oil. There's all the transportation and the refining that has to be done. And so that still has to be priced in. And of course, the place selling it has to make a profit. So oil is not free. Gas is not
No,
free.
no, and from an investment point of view, Bobby, the thing that, I keep reading over and over is that the amateurs, people like, most people I think that listen to this show, enthusiasts are gonna say, "Wow, this is low," so they're gonna go buy maybe an oil ETF, and the problem is that oil does not have to go up anytime soon, and just because it's low now doesn't mean it's going to not stay low. Times are different. This morning for Stacking Benjamins as an example, I interviewed a woman who is in human resources and talking about the changing nature of work. And I asked her, do you think that things are going to change permanently? And she said, absolutely. And an interesting thing is in the American, and this is, there are so many little things like what I'm about to tell you going on that the average investor doesn't know. The Americans with Disabilities Act, she told me, had provisions in it that said that people had to go to the office because people working from home couldn't do the same work. And so, whenever there were lawsuits for people with disabilities, companies were always able to hide behind you can't work as well at home as you can in the office. Clearly, now companies have had to change their stance there, which means that you will see a bunch of lawsuits potentially if people aren't allowed to still work from home, which means when it comes to oil prices, we may never, Bobby, see people driving as much as they used to drive. We may see a lot more people working from home. The nature of school may change overall as we adapt very quickly to online learning. So, just because prices are low doesn't mean it's going to go back up. And one more thing here in my little diatribe is that prices are always low for a reason. And the first thing to do before you buy anything that's low is try to understand as much of that reason as possible before you buy. Because it's only when you understand why the pros have priced it this low that you understand what the downside is before you go jump in. Certainly, at some point, oil will go higher. We don't know how long it's going to take. We don't know that it'll beat the S&P 500, so investing in the S&P 500 still a lot safer than betting on oil. Will oil win or not? Time will tell.
Yes, because there's also a lot of factors that can control oil because it's not always driven by market forces. We do have groups like OPEC that can control supply and demand, and that, I'm sorry, control supply, I should say. And that is a factor. I
Yeah.
also think it's really important that you brought up the idea that people rush to capitalize on this. I want to bring up a CNBC piece that was recently published, and it's titled Young Investors Rush into Struggling Oil ETF That Isn't Even Tracking the Price of Oil Anymore. And it talks about this. And again, I'm not a specialist in oil. I don't understand a lot of this, which is why I was doing a lot of research on it. And it does say that USO is the ticker, I guess, the ETF symbol, was the most bought stock on Robinhood and by far the highest volume trade on SoFi. The ETF saw a 300% increase in ownership month over month, but apparently this is no longer um, tracking oil. Really, it says, the article, this is a CNBC article, says some millennial investors have been duped by a complex oil ETF that is struggling to stay alive. And it talks about the fact that they mistakenly thought this fund was a proxy for the spot or cash price of oil and bought in as its price plummeted, but it isn't. The purpose of this ETF is to track the front month of oil futures contracts. So it's been the top, the most bought name on Robinhood, at least. And this is something that a lot
Oh, no.
people have been falling into. So, you know, retail investors, I'm just reading from the CNBC piece, investors buying the fund likely aren't even aware that it is no longer tracking oil prices in lockstep. The fund has apparently been changing its structure, and CNBC asked them that, and the person running the fund, the company's chief marketing officer, told CNBC, quote, due to extraordinary market conditions in the crude oil markets, including super contango, USO has invested in other permitted investments as described in the prospectus. So that's a big investor caveat. So all these people that are, it's getting all this action on SoFi and on with SoFi investors and Robinhood are believing that they're buying into, you know, a low price that's going to rebound. But in fact, because the prospectus allows this ETF to buy different things, they are not
Oh,
doing what people think they're doing. So it just shows you have to really be careful when you buy something based on the label that they call a fund, whether it's a fund or an ETF. If the prospectus allows them to change what they're actually buying, you need to ask questions and be aware of that. I mean, that's crazy.
This is where the little guy gets burned again because they don't do research, where the pro doesn't make that same mistake. That's really horrible.
Yeah.
It's very frustrating, and certainly a platform like Robinhood is a place where investors are really gonna not have a lot of information when they make their trades. So, yeah, that's frustrating.
Yeah. I
Wow.
was
Hey,
said I didn't do a lot of this, so I'm not doing anything, but some people are jumping in.
I went to jump in immediately, when it was down going, "You know what? I thought oil can't stay low forever," and I thought, "This is a fantastic thing." In fact, there was a 3-minute moment where I thought I was going to put everything into this because of the fact that I thought that this was such a quick market inefficiency. I was gonna bet the farm that oil came back, but I did what I always do, Bobby. I went out and I started researching, and I saw that a lot of people are gonna get burned doing this. And you see why people are going to get burned because in June, there's a good chance in June, because of the lack of storage facilities, we're going to see the same thing happen again. And then we may see it happen again in July and again in August. So if it happens month over month over month, oil's going nowhere soon. Uh,
We'll see.
Lots of people are going to have. Imagine the shell truck in front of your house because you held on to the futures too long. That'd be horrible.
But look, the oil producers are certainly gonna do everything they can to cut their production. So we'll see.
Sure. Yeah, and I like that explanation about refineries too, about refineries curtailing stuff because of the fact they just don't have as many people driving. So,
Yeah.
and obviously, gas stations have fixed costs, so that's difficult. We're doing today's show live on YouTube, and JM Boots is with us. Chris is with us. Hey guys, JM Boots says I would not cry if oil stayed down for good, and certainly I think there's a lot of people going, hey, I kind of like these prices. Somebody was saying on Facebook, my cousin had a very funny meme that said, Bobby said that we're all talking about what we're watching on TV. We all have frizzy hair, and oil prices or gas prices are nearing $1. It must be the '70s all over again.
Mhm.
So
Well, the '70s,
maybe so.
maybe I was barely, I was a child in the '70s, but, I thought the '70s there were gas lines. Was there there was gas shortage,
That's true.
right?
Yeah, near the end of the '70s. That's right.
Sorry.
Yeah,
Yeah,
maybe Peggy was talking about the early, well, even then
I
though,
don't know.
even though there were gas shortages, I still remember gas price then gas prices at $1 was a big deal. I mean, that was high, but with inflation, we think of that as incredibly low.
But I
So
think I
pretty
remember
funny. Hey,
going
we
with
we
my mom to wait for gas, like, every other day you could go or something crazy like that.
yeah, yeah, I remember that too. But you, put this on Instagram too. We had an interesting question today.
Oh, yes, let's do that. Actually, our producer, Ashley, put it on Instagram for us, so let's see. Um, we asked our friends, "Are you buying oil ETF or oil stock?" So what did our Instagram friends say?
Well, I'm hoping based on the conversation that we had today that the answer is close to 0 people doing it. We're looking at a lot of people getting burned though. So I'm gonna say 80% are saying no, 20% are saying yes.
You are so good at this, Joe. So good. It was 87-13 in favor of no.
Wow.
So that's
Yeah.
darn close. That's really good, Joe.
I feel
I'm
I
impressed.
feel bad for the 13 because I strongly think they don't know what they're getting into. I hope they do, but I think they don't know what they're getting into.
And I hope if
And
they
I hope they
I hope if they bought an oil ETF, it was actually an oil ETF.
Yeah, good point. Well, and I hope they win. I do hope they win because we're not saying they're gonna lose. I'm just saying there's a lot of uncertainty. In those responses, I didn't see the percentages, but you did send me the responses ahead of time.
Mhm.
T Bellinger 13 said, "I'm hopeful we'll move away from oil and to cleaner energy sources in the near future." Hitty Gritty said, "Way too much risk. Done this before." Sounds like, Hitty Gritty touched the stove before and learned a valuable lesson. M. Armstrong says most people only exposure to oil is the cost of gas, plus the price at the pump is a lagging indicator. That's true. Brittany complains, I don't have any money. Boy, that's a lot of people right now, Brittany, with so many people out of work. But even if you did have money, I wouldn't start with oil. I'd start with an emergency fund, right? And then not part of an investment strategy. Somebody else says, and the Netter says, I'm sticking to my original plan. it's working well for me, which is, I think, a great place to leave that.
Very well
In
said.
just in just a second, Bobby and I are going to have our big takeaways from today's show. But first, want to talk a little bit about Tiller Money. Tiller is what I use to manage my money. And it's a great time while you're at home to get your budget together. Your financial life can be in Google Sheets. And even if you're somebody that doesn't like spreadsheets, what you like about Tiller is there's a whole community of people making sheets already for you so that you don't have to reinvent the wheel. Now, the good news is that you have all the security of having your own sheet on your own computer, but once a day, everything is automatically updated from all the different places that you give it. So your investments, your bank accounts, places that you owe money to, all your assets, liabilities, your net worth, you can track everything. You can set up, and I set up different areas of my budget where I only want to spend so much money. And I can give myself alerts that say that, you know what, I overspent in areas. One area I'd love to overspend on sometime soon is restaurants, but I think it's going to be a long time before I eat at a restaurant again, sadly. I just want somebody to serve me, Bobby. I can't wait to hand a
Isn't that
menu
what
to
you're
someone.
you
Yeah,
and Cheryl
not
have to take turns.
yeah, not happening here, sadly. Uh, tillerhq.com/MWF, and you'll get 20% off your annual subscription if you use our link, tillerhq.com/MWF. All right, Bobby, what's our takeaway today?
Hashtag it is complicated. Just like retail clothing, the economic model here has a lot in it more than the cost of actual goods. Many of the costs involved in getting the oil to consumers is still there. And with demand down so much, supplies will start to adjust. At least I believe so. I know Joe kind of thinks this is going to repeat. I think that we're going to cut production. For now, at least, you're probably not putting a whole lot of fuel in your vehicle. So your gas bill is a fraction of what it was. Even if you aren't actually being paid to fuel up, I think gas prices are low enough. I'm good.
Yeah, I think this is a big time when you just need to know what you're getting into before you invest. We always say to make sure that you know why things are the way they are. Just because something's low doesn't mean it's a great opportunity. There are people that are professionals that do this all day long. They create those prices because they know that something's not a good deal, so they sell it. And when prices go really, really low, that's not just a sign that, hey, you're getting a great discount. Like when you head to your favorite store and you find a sweater that's 30% off, this is not the same thing. There's a lot of reasons why prices are low, and you should, much like in a discussion where they say, seek to understand before trying to be understood, seek to understand the investment before you buy it.
Very well said, and so appropriate in this particular instance. Like I said, a lot of us understand how index funds work and so on, and we think we get it when there's an ETF that says oil in the title, or a mutual fund. But we need to know what we're buying. It's not that simple.
Yeah, it really, really, especially this. It's not. It was fun to dig into today, though, Bobby. Tomorrow we're going to dig into mortgages, but where can people find us?
People can find us on Instagram and be part of our polls and quizzes at Money Friends Pod. That is our handle also on Twitter. So please join us and stay close to the stories on Instagram, so you can be part of the show, even if you can't join us live on YouTube as we are recording right now.
Yeah, and if you do join us on YouTube, you just go to youtube.com, put in Money with Friends, and click the subscribe button. There's also a bell there, so it will alert you when we go live. And if you want to hang out with us, we're generally here on Thursdays or Fridays recording this particular episode. So, on behalf of Bobby, I'm Joe. We'll see you guys again on Monday at Money with Friends. Bye bye. 22 minutes.
Oh,
All right, guys.
I didn't think it
We
was.
are
Hmm,
I'm sorry.
I didn't think it was so long. It went so fast.
It was boom. That was good. We are going to go away and come back with the second headline. So if you hang out here for just a minute, we'll be right back.